If you've been watching Calgary's real estate market in 2025, you may have noticed a subtle but important shift. After years of rapid price appreciation fueled by high demand and limited inventory, the market is showing signs of modest changes, and not all segments are moving in the same direction. For homeowners, buyers, and investors, understanding these nuanced dynamics is critical. While some property types are appreciating steadily, others are cooling, creating a more balanced, segment-specific market. Let's break down what's happening and why it matters. Calgary's market snapshot. According to the Calgary Real Estate Board, CREB, and multiple real estate analytics sources, the overall benchmark price in May 2025 sits around $589,900, showing slight month-over-month stability. Detached and semi-detached homes have experienced modest gains, while apartments and townhouses have seen slight declines. CREB forecasts a slower price growth of 3% for 2025, down from the 7% in 2024. These numbers indicate that while Calgary is no longer in a frenzied seller's market, it remains robust, especially in segments tied to families and long-term residents. Segment-specific price movements. 1. Detached homes. Detached homes remain the backbone of Calgary's housing market. Key trends include stable demand among families seeking space and proximity to schools, slight price appreciation, 2–4%, especially in suburban neighborhoods like Mahogany, Airdrie, and Cochrane. Buyers now enjoy slightly more negotiating leverage due to increased inventory compared to the frenzy of 2023–2024. 2. Semi-detached homes. Semi-detached homes are showing similar trends. Moderate growth in benchmark prices, typically 1–3% annually. Attractive to first-time buyers who want a detached feel at a lower cost. Inventory remains sufficient, preventing sudden price spikes. 3. Apartments and condominiums. The condo/HOTS apartment market is more mixed. Slight price declines, pre-1–2%, particularly in older or smaller units. Newer developments near transit hubs, like Green Line LRT corridors, are holding value better. Rental demand remains strong in downtown areas, but oversupply in some submarkets is tempering price gains. 4. Townhouses. Townhouses are somewhere in between. Prices are largely stable, with small fluctuations depending on location and community amenities. These properties appeal to young families and downsizers, balancing affordability and lifestyle. Factors influencing modest price changes. Increased inventory. Calgary's housing supply has grown, moving from ultra-tight conditions, 1.1 months of supply, to roughly 2.6 to 3 months of supply. This gives buyers more choices, preventing rapid price escalation. Population growth and job market. Despite moderation in price growth, demand fundamentals remain strong. Calgary added an estimated 52,800 residents in 2025, driven by both interprovincial migration and international immigration. Job growth in tech, energy, and healthcare supports ongoing demand for homes, particularly detached and semi-detached properties. New construction. A record number of new homes, 2,500 in 2024, especially apartments and condos, is impacting price dynamics. More supply means slower appreciation for oversupplied segments. Investor behavior. With rental yields cooling, some investors are pulling back from certain segments, particularly smaller apartments. This affects price growth in those areas. Affordability considerations. Calgary remains more affordable than Vancouver or Toronto, but buyers are price sensitive. Small increases in benchmark prices can influence purchasing decisions, particularly in the apartment and townhouse segments. Implications for buyers. Detached and semi-detached buyers. Modest price growth makes these segments a solid long-term investment. Negotiating leverage is better than in the previous seller-heavy market. Apartment or condo buyers. Opportunity to purchase in oversupplied areas at stable prices, particularly in older buildings or those farther from transit. First-time buyers. Townhouses and semi-detached homes remain attractive due to affordability and lifestyle balance. Implications for sellers. Detached, semi-detached sellers can expect steady demand and moderate appreciation. Pricing competitively is key to avoiding long listing times. Apartment condo sellers may need to offer incentives or price strategically to attract buyers, especially in oversupplied or older properties. Implications for investors. Focus on fundamentals. Invest in areas with strong demand drivers, proximity to schools, transit, and amenities. Diversify by segment. Consider detached or semi-detached homes for stable appreciation, while carefully evaluating condos in oversupplied areas. Long-term perspective. Calgary's market is stabilizing, but fundamentals remain strong. Holding property over multiple years still offers potential growth. Looking ahead, experts forecast that Calgary's price dynamics will continue to be segment-specific. Detached and semi-detached homes, steady, modest appreciation. Condos and apartments, flat to slight declines in older or oversupplied areas. New developments near transit hold better value. Townhouses, stable, with minor fluctuations based on location and amenities. The market is moving from a seller's frenzy to balanced conditions, benefiting buyers and long-term investors alike. Conclusion: understanding segment nuances is key. Calgary's real estate market in 2025 isn't about massive swings or headline-grabbing spikes. Instead, it's about modest changes, mixed across segments, reflecting a more mature, balanced market. For buyers, investors, and sellers, understanding these nuances is critical. Detached and semi-detached homes continue to offer stability and appreciation, while apartments and townhouses require careful attention to location and market trends. What segment do you think offers the best opportunity in Calgary right now? Detached homes, condos, or townhouses? Drop your thoughts in the comments below. I'd love to hear your perspective.